Great. Let's bring everything together with Glen Wood, Head of Sales Global at Mitsubishi UFJ Morgan Stanley Securities, also in Tokyo. Glen, morning to you. As Kerry and I were just talking about, Canon, Nintendo, the results in some particular cases might not have been glaringly great, but the market as a whole is still, kind of cheering the general mood right now. Those are peculiar companies. It's maybe one device or one gadget didn't do so well. Can't really write off the company or the market as a whole. So the market's priced at 15 right now, right? Going ahead. Is that expensive for the program that Abenomics has introduced to us, or is that priced well?
Hi, Bernie. Hi, Gauri. It's good to see you again. I would say that it's not properly priced, Bernie. What we're seeing in Japan is nothing short of an economic revolution, and I think many global investors still don't believe it. And there's a lot of upside to come. Sure, during that time of transition and before we actually see some of the structural reforms coming through, you're going to have a lot of volatility, and there's going to be a lot of naysayers and skeptics. That said, there's huge changes here. We've got stars aligned in Japan, whether it's the new Bank of Japan, the huge approval ratings for Abe government, and the election coming in the summertime that we haven't had for many, many years.
Wow. Glen, I don't think I've heard this language from you ever in all my times talking to you. Stars aligned, revolution. I mean, the stars can go out of whack really quickly if some comet kind of pops in and spoils the party. I mean, the hard work is to come, isn't it, in terms of policy shifts?
Absolutely. And it is going to be hard work. That said, the government hasn't had this type of opportunity in many years when the approval rating's been so high, when there's such a large portion of the population that wants change and that is pushing for something new, whether it's on the back of the earthquake and the nuclear issues in the country, or whether it's just the fact that people are kind of sick and tired of seeing bonuses go down year after year. I think we're ready for some change, and people are going to support this, and you are going to see some structural change. And you have global investors sitting on the sidelines still saying, show me. And by the time those structural changes are announced, it's going to be pretty late, I think, to make investments in Japan. So this is the time.
What specifically in terms of structural changes? I mean, there's so many that they could sort of embark on, but give me three elements where you think they're going to move first.
Sure. One thing that we've talked about before here is energy, and I think it's the most obvious one. It's really the elephant in the room, where the government would have huge support, I think, for a shift towards renewable energy. And Japan has the technology, it has the companies, it has had for many years. All it needs to do is put its foot forward and make the investment. And I think, actually, at the same time they did put that forward and make that huge investment, they could actually turn on some of the nuclear power as well during that transition period, which would lower, again, manufacturing costs for a large portion of Japanese manufacturers.
Glen, I want to address, if you could, for a second. I know you're the head of sales at the House there, and I don't want to turn you into a political scientist or anything like that. But I mean, tensions have been revived. I mean, we've been brought pictures of the China Maritime Agency, big ships alongside the Japan Marine Agency or whatever they call it. There's a piece in the Journal on the front page today saying that Mr. Abe has been talking more openly in recent days about returning to his what they say is what they term his lifelong goal of revising Japan's long-in-service pacifist charter. I'm just kind of wondering what friction against the Chinese, the South Koreans, and at all. I mean, what that could do to the whole Abenomics program, if anything.
Yeah, make no mistake, Bernie, there are a lot of risks out there, and geopolitical risks are top of the list. I would say that any sort of talk about resurgence of Japanese arms buildup and the like would certainly be a huge negative for the market. And that's exactly why I don't expect to see it. Abe has too much to lose at this point to take that type of risk. And at this point, it's not only him. I think he and Kuroda-san and the team realize that this is one of the last chances that Japan has to really get things right. They're on the verge of a potential JGB crisis, which would really be a disaster for this country. So I don't think they're going to play that card in the near term.
Glen, how big a risk is a continued depreciation of the yen at the pace that we've seen over the last 4 months?
Agreed. The pace is not good. I would prefer a much slower pace. That said, currency markets and equity markets, as we know, price things in very quickly. and they try to price things in 6, 12 months in advance. So when you have the government and Kuroda and Abe saying unprecedented things in the press about levels where they want to see the yen and so on and so forth, you know, that, in my opinion, is not good for the market. That said, a weakening yen is what we've all been waiting for, and we know that currency intervention is not the way to get it. So all in all, I think we're headed in the right direction, and this is positive both for the country, for companies, and for equity investors.
Glenn, appreciate your time, okay? Positively upbeat on the prospects for the market. Glen Wood joining us.
Thanks very much, Bernie.